Well, guys, what an exciting 24, 48, 72 hours it has been. Exciting may not be the best word to use. What a chaotic, I should say, time it has been. We have literally seen the collapse of FTX, one of the largest cryptocurrency exchanges, one of the kind of golden childs and champions of the cryptocurrency industry, actually fall. And there's a lot of unanswered questions to go over there. So we will touch on that, although really today is going to be our daily cryptocurrency market update. For those of you that are new to the channel, we do these every day. We give a very good perspective on the cryptocurrency market, but we don't just look at the crypto markets. We look at the FX markets. We look at the stock market, and we really try and paint a picture of the economy and the kind of macroeconomic landscape. As I believe, and I'm going to show you this right at the start of the video, that its interest rate rises and the effect that has on liquidity, money, and the direction of it that have essentially shaped these markets thus far. So we will talk about yesterday. I released, actually, I'm knackered today, guys. I released 5 videos yesterday to try and keep everybody as informed as possible. But really, with us having the CPI data reveal today, which is set, the forecast is 8.1, the consensus is 8. We'll see what we get, a higher and more persistent inflation number will really reinforce the Federal Reserve's stance to be aggressive and continuously aggressive. This, even where it currently is, if they stopped upping interest rates here, is negative. If they continue to do them by any sort of degree, continues to get more negative. As we believe it is all a liquidity game, investing, ladies and gentlemen. And you want to follow the money. This term, follow the money, you know, following the liquidity is really what's meant by that. And we'll show you right off the bat. So it's going to be a very important today with the CPI print. We know all the insanity that took place yesterday. If you guys aren't following me on Twitter already, guys, head over to @RealAllInCrypto. Well worth following me because we kept you completely up to date yesterday. We spoke about everything that was going on. We even gave you the news that Binance were going to pull out of the deal to acquire FTX before that was even the case, as Wall Street Journal essentially leaked it. Wall Street Journals tend to be really good at leaking things. So let's get into it, guys. Ultimately, and I really want to show you this right off the bat, you know, I do believe that interest rate rises have just essentially driven the direction of markets. When money is free flowing and cheap, you know, everybody's using it, borrowing it, and putting it in certain places. Typically, it finds its ways into the asset class. We know that assets since March 2020 onwards, after we had that crash, you know, the Fed needed to come out and stimulate the economy and kind of hold it up and bolster it. That, of course, they did that, of course, by inflating the money supply, which found its way into the asset class. Since interest rates have gone up, that money is now being redirected. We don't have the printing of it. You know, we know that Bitcoin has never had to face this kind of environment. We still think that we're in a bear market and that it's actually going to get worse, despite what happened yesterday, just based on the sort of macro fundamentals. We come to that conclusion. But this in red is the interest rate rises. It's inversely correlated. So when it goes down, it means interest rates are going up. This is a 30-day Fed Fund futures interest rate. So this is a derivative that people can speculate on and actually put money on. We have Bitcoin in orange and we have the NASDAQ, and we could have used any stock or any index, really. We could have used gold. We could have used anything, even house prices. You know, we can see that we have a decline in these in the kind of foresight of interest rate rises going up. And why is this? Why do interest rates dictate markets? Well, it's because it takes liquidity from one place and puts it into another. And in this case, it takes them from the markets to the debt markets. And this is the whole kind of point of interest rate rises in regards to killing off inflation. They're trying to kill demand, and they do that by wealth destruction. And that is still the present situation that we find ourselves in, guys. So we just because we've had this capitulation, and is it really capitulation? You know, compared to what we've previously seen in terms of capitulation, it potentially could just be the start of it. Now, I don't know. You know, we said here, okay, we don't think it's the bottom. Just because we've been consolidating doesn't mean that there's mass accumulation going on here from massive institutions and corporations. We think more than likely it's just a lack of interest. But we can always be wrong. So even though I think there's still more downside, we can absolutely be wrong. You know, Bitcoin did touch $15,776. Significant sell-off. You know, it's a very sad day. Even though I wasn't involved with FTX, it was a very sad day for me as somebody who cares about this industry. And, you know, it's still, for me, I don't think this is over. And I really want to make that important. And I think there's going to be a lot of people trying to catch this falling knife. There always is, guys. But the problem is when you have a significant event today like the CPI print coming down, we know the whole reason, and we've just explained why interest rates are so important to markets. You know, investing is just a liquidity game, in my opinion. You know, this print, if it comes out higher than expected, that's actually going to probably be pretty negative for markets, because it means the Fed are going to keep their foot on for longer. And people continue to kid themselves on that a pivot is coming, that, you know, they're bluffing. Well, they've shown us continuously that they're not, and that what they're doing is set to continue. And you've got to remember, and this is something that we spoke about, and we spoke about the correlation between the dollar and Bitcoin. Okay, yesterday there was a lot less of a correlation, but that's because we had internal issues going on. It's a general, you know, on balance of probabilities, or as a generalization, they move perfectly in sync. Yesterday wasn't quite the case, although there is still a correlation there due to our own internal issues. But, you know, if the dollar pops its head back up, and this is indeed a falling wedge, and it does break to the upside here, that correlation doesn't go away just because we've had a capitulation. Looking today, we see the UK markets are up, the Asian markets are down. The Dixie is, you know, staying relatively, it's at this kind of midpoint, this splitter, if you will, which to me shows relative strength and weakness within this wedge. We have the futures market, which is slightly up. This is all in preparation. You know, it was a bad day for the stock market also. We'd looked at the stock market, we'd looked at this falling rising wedge that it was in. So can we derive anything on how today's CPI print may go as a result of this? Potentially. I think you're going to have lots of people hedging to either side, but the market sold off pretty harshly, certainly the tech market yesterday, and I think this may be a sort of precursor to what potentially is coming today. In regards to crypto, we are seeing a bit of a rally, but you've got to remember, you know, this is all about strength. This is not V-shaped recovery strength. And I actually said to my Patreons yesterday that, look, you know, we don't want to catch a falling knife. We want to see. It's unlikely to me that you're going to get a V-shaped recovery and go off into a bull market here. And you've got to remember, if you look at capitulation events, typically they come in waves. You know, you can see this one here. Found its bottom, had a bit of churn before then selling off again. You look at all these capitulation events, usually once that kind of bull is rolling, that momentum has started, you know, they continue. And I do believe that's the case. And we've had targets. We did actually call this a head and shoulders. I don't think really, I think this is just more grinding. We had said that essentially what's happening here is it's kind of like a ball losing momentum. You know, you're sort of failing to put in higher highs and going lower, and eventually you were going to spill. I mean, potentially you got your head and shoulders. You know, this is a long drawn out, potentially complex right shoulder that's now spilled. Head and shoulders don't just have to occur at the tops and bottoms, guys. You know, for any market technicians that's been here for a long period of time. And this is what separates me from your other YouTubers that have kept you on and wrecked you, basically, is because I am actually a market technician. You know, this is what I strive to be. It's what I strive to do for a living. Eventually, I want to manage funds, so on and so forth. So I have to know what I'm talking about, certainly when it comes to charting, and we're going to be doing a lot more of that on this channel. So it's going to be a real massive day today. You know, the consensus is 8.1, or the consensus, sorry, is 8. The TEF is 8.1. 8.1 is still bad because it shows a very slow decline in inflation. And if you actually look at some of what makes up inflation, you know, you are seeing a slight head raise here. Yes, we've seen a decline. It's natural to think that inflation will come down as we move towards deflation caused by interest rate hikes and that draining of liquidity from certain areas into others, i.e. the debt markets. But it's at what kind of pace? And I don't think the Fed are going to take their foot off anytime soon. And I also want to reiterate this, that even if the Fed came out and said, okay, we're not going to do any more interest rate rises, just where the interest rate is now is detrimental. Certainly over, you know, the longer it goes on, the more detrimental it becomes, and the broker, the more damage you find popping up in certain areas is basically what I'm trying to say. So I still do think it's a very bleak situation. I personally, if I'm being honest, and all you're going to get from me on this channel is honesty, I'm not running in here. You know, I still think we've got a lot of SOL that's getting unlocked. Yes, and we should have made 20, 30, 40 grand on this, by the way, guys, but we've messed up the entry and got out way too soon. Anyway, you live and learn. It's one of those things. No point dwelling on the past. But yeah, you know, we've still got a lot of SOL that's essentially supposed to be unlocked. Yes, we know that the Solana Foundation came out and said, I think 27 million of it was theirs, but there's still a lot of other people's that is likely to hit the market. You know, I think there's the problem with when stuff like this happens with FTX and these big industry players. And by the way, people in FTX that had their funds in it can't get them out. I don't know what happens there. And there's huge, and I was reporting on it all yesterday. This was a tweet. There is something seriously amiss at FTX official. If we assume FTX operates at a similar scale to Coin, which of course is Coinbase, there is a lot more consumer assets missing than we think. Combined with the on-chain forensics done, I'm essentially guessing here that $10 to $20 billion of customer money is missing. You know, that's a reality that I think is going on here. I think this damages the space as a whole, really tarnishes it. And I think it's going to, just like, you know, with the Luna fiasco, I think it's going to... We also shorted Luna, by the way, so make sure you hit that subscribe button on this channel. You know, anyway, I think it's going to take a while to recuperate. And I would be rather shocked if this just instantly recovers now and goes on and even comes back into this range. I think you're now doing what you do when you capitulate. I don't think this is real capitulation yet, actually, to be honest. And I think potentially do we see those catalysts today. This is an article I was reading earlier. The latest inflation numbers come out tomorrow, and it's expected to remain high. Here's what you should know. So even if it comes out at 7.9, that's still high. And the thing is with this, it's really going to affect the dollar. We know what the correlation with the dollar is. Yesterday, there was a slight lack of correlation. But that's because we had internal issues going on, which is fine. Generally, there is a very good correlation there. High inflation, I see the dollar going up in either scenario. Certainly when the Dixie, which is pegged against other FX markets. But a lower inflation may bolster the dollar because, you know, it's holding itself more against the assets it's pegged against or the commodities it's pegged against. But a higher inflation may also bolster it because ultimately that means they're going to have to be more harsh on it and persistent on interest rate rises. So it's going to be very tricky. And I'm going to bring this video out half an hour earlier, so you've got an extra half an hour with the video because the CPI comes out at 1:30 UK time. So it's going to be extremely interesting. The main message and takeaway is that, you know, at the end of the day, guys, if anybody got hurt here, I've been exactly where you were. In 2018, I had money on the likes of Cryptopia. I invested in everything back in the prior bull market. Things like Electronium, you name it. The only thing I didn't get involved with was BitConnect, although I had many, many friends that did. This is, if you got hurt seriously yesterday, this is the very catalyst, the very thing that is going to make you successful. And remember that. And one main message that I want to give to people that are aspiring market technicians, aspiring traders, aspiring investors is don't give up. In the long run, it will be worth it. One reason, and one of the main reasons people don't make money in markets is because they give up. Most traders quit after 6 months because it's a hard game to do. Trading is, in my opinion, a lot harder than investing. But investing is also very hard. And the main message here is don't give up. Don't be one of those people that accept defeat. I believe in you. You need to start believing in yourself. You know, let's all make some money together. So the main message really is that we've got the CPI today. It's going to be interesting. For me, I can't really speculate too much. I think actually probably either scenario is bad. And I think, and I spoke about this on Monday, I think we're moving from inflation to deflation. And deflation is really bad as well because it shows wealth destruction. And we've shown you a number of things like personal saving rates, credit card debt. You know, we've really spoke about the debt markets and why it's so pivotal. We're also seeing layoffs. I mean, Meta laid off, was it 11,000 people or something along to the tune of that? We're seeing them across the board. We know that the stock market has a huge correlation with unemployment. And essentially, unemployment, when that's at a record low, stocks are at a record high. So unemployment would actually need to continue to fall in this environment for stocks to... And unemployment's at a record low now, by the way, ladies and gentlemen, would need to continue to fall for stocks to see any kind of a rally. And I do believe we're just in a 2008 scenario. It's a bias that we've maintained now for 7 or 8 months. We've been spot on. I'm going to keep you guys safe. It's why we changed the logo of this channel to a bird so that we could take people under our wing. All I've got for you in this video, guys, I'm going to love and leave you on that note. Going to be an interesting day. See you in the next one. Thanks a lot for watching, guys.